Something extraordinary has just happened in the global economy. And here on MacroEdge, we're cutting through the noise to decode what it really means. Gold just broke through the $4,000 mark for the first time in history. Not just setting a record, but sending a message. A signal that something deeper, far more consequential, is unfolding beneath the surface of the financial system. For anyone who's held gold for years, patiently stacking, watching others dismiss it as outdated, this moment feels like vindication. But those who know the metal's true nature understand. Gold never makes these moves for celebration. It moves for survival. When gold rises this fast, this far, it's not just about wealth. It's about warning. Because every great gold rally in history has whispered the same truth. Something in the monetary system is breaking. Look back to 2014 through 2019. Gold moved sideways, trapped between $1,100 and $1,400 an ounce. Traders called it dead money. But quietly, forces were building. By mid-2019, gold broke free. Within a year, it had surged over 50%, topping in August of 2020. That surge didn't follow the chaos of the pandemic. It preceded it. It began before the repo market meltdown of September 2019, before global stimulus, before the printing presses ignited. Gold saw what was coming and moved first. That's gold's hidden power. It doesn't react to monetary policy. It anticipates it. It's not a mirror of inflation. It's a forecast of it. When gold peaked in August 2020, inflation wasn't even a concern. The CPI sat below 2.5%. But by the next spring, prices were surging, and by mid-2022, inflation hit levels not seen in 40 years. Gold had already signaled the storm a full year in advance. And it wasn't just inflation. Back then, the stock market hadn't even recovered. The S&P 500 was still below its pre-crash high, but gold had already completed its move, anticipating what easy money would unleash, a speculative mania that peaked at the end of 2021. So, when gold doubles again, blasting through $4,000 in 2025, you have to ask, what's it warning about this time? To answer that, look at who's buying it. It's not retail investors chasing headlines. It's not even hedge funds. It's central banks, the same institutions that print and control the world's money supply. For the first time in modern history, foreign central banks now hold more gold as a share of their reserves than U.S. Treasuries. That shift marks a turning point. The world's monetary architects no longer see U.S. debt as the ultimate safe haven. They see gold. These aren't emotional decisions. They're strategic. Central banks understand what's coming, and they're preparing for a future where trust in paper money, especially debt-backed currency, starts to erode. Remember the pattern. Gold rallies first. The world catches up later. From 2020 through 2024, while governments were tightening and raising rates, gold stayed quiet, waiting. But now, it's erupting again, signaling that the tightening cycle has run its course, and that the next phase, the phase of renewed money creation and hidden devaluation, has begun. But this time, something strange is happening. Gold is surging even as risk assets hit new highs. Bitcoin, the S&P 500, the Dow, even housing prices, all at records. This isn't a flight to safety, it's a flight from faith. Investors aren't fleeing risk, they're fleeing the system itself, because beneath the surface, the foundation of global finance, sovereign debt, is starting to crack. We're now facing what could become a worldwide sovereign debt crisis. Every major financial crash over the last 3 decades has been bigger than the last. In 1998, long-term capital management, a single hedge fund, almost collapsed the global system. The Fed forced banks to bail it out. 10 years later, in 2008, it wasn't a hedge fund. It was the entire banking system. Governments had to save the banks. Then, in 2020, the system itself seized up, and governments had to save everything: corporations, workers, and ultimately themselves. Each time, the burden climbed higher up the ladder. Now there's nowhere left to pass it. The next failure will come from the top, from the governments that guarantee all others. The United States alone now carries over $35 trillion in debt, growing by $1 trillion every 100 days. Interest payments are outpacing defense spending. Japan's debt-to-GDP ratio is beyond 250%. Europe faces rolling fiscal emergencies. These aren't isolated numbers. They're flashing red warnings of a system running out of time. And gold knows it, because gold doesn't respond to optimism or panic. It responds to broken math. There are only three ways out of a sovereign debt trap. The first is austerity, cutting spending, balancing budgets, tightening the belt. But no government wants to tell its voters no. Entire societies have grown dependent on benefits, subsidies, and easy credit. Political survival depends on keeping the money flowing. So, austerity is off the table. The second option is growth, to outpace debt through productivity and innovation. That's the dream every politician sells. But growth can't solve a debt mountain this size. Productivity gains from AI and automation might help, but they can't offset decades of overspending and demographic decline. That leaves the third and inevitable path, monetization, printing the debt away. It starts quietly. The central bank begins buying bonds again. Liquidity injections are called temporary. Fiscal expansion becomes stimulus. But over time, that stimulus becomes the new normal, and money creation becomes the only way to keep the system standing. We've seen it before, in the 1940s, the 1970s, and the 2010s. But this time, the scale is unprecedented. And unlike before, inflation may never fully go away. This doesn't necessarily mean hyperinflation. It means chronic inflation, higher than expected, longer than expected, and more destructive than expected. It means real returns vanish. It means the dollar quietly weakens, not overnight, but year by year. And that shift changes everything, not just markets, but society, because inflation is the silent thief that divides nations. Those with assets, gold, silver, land, equities, hold on. Those without fall behind. The middle class erodes, wealth consolidates, anger grows. That's not speculation, that's history. Gold's move to $4,000 isn't a celebration. It's a signal that this process is already underway. For 5,000 years, gold has been the truth meter of civilizations. When currencies weaken, when empires overextend, when trust fades, gold rises. It doesn't need a press conference or a forecast. It speaks the same language it always has, value without counterparty risk. And yet silver, gold's quieter twin, often tells the next part of the story. When faith in fiat money truly breaks, silver becomes explosive. Industrial demand collides with monetary demand, and it outperforms gold dramatically. So maybe the real question isn't, why is gold at $4,000? Maybe it's, what is it warning us about this time? Perhaps it's the recognition that governments can't tighten forever. Perhaps it's a preview of the coming monetary shift, a world slowly moving away from paper promises toward tangible value. Or perhaps it's the opening act of something even larger, the global repricing of money itself. Whatever it is, gold sees it first. It always has. Because gold isn't about profit, it's about preservation. It's not about optimism, it's about realism. When everything else depends on confidence, gold depends only on itself. So as this new era unfolds, we have to ask, what kind of wealth do we want to hold when confidence breaks again? If fiat money represents faith, gold represents truth, and right now, truth is winning. Gold at $4,000 isn't just a headline, it's a verdict on decades of unsustainable debt, reckless policy, and financial complacency. It's the world quietly voting no confidence in paper promises. And while the masses celebrate new highs in stocks and digital assets, the few who understand the deeper signal are already preparing for what comes next. Because every cycle ends the same way, in a return to reality. So think about it. When gold speaks, are you listening? When the most timeless store of value on earth screams that something is wrong, do we hear the warning, or do we ignore it until it's too late? Because gold isn't cheering the end of the system, it's mourning it. And silver, waiting in the shadows, is preparing to take its turn when the world realizes that history doesn't repeat. It rhymes perfectly. Here at MacroEdge, we read those signals. We look past the headlines and watch what the metals are telling us about markets, about policy, and about power. Because in a world drowning in noise, clarity is your greatest advantage. And before we close, let's end on one question and one answer. If you could hold only one thing when trust in money disappears, what would it be? Would it be gold, the eternal store of value, or silver, the metal that moves when faith finally breaks? The answer isn't just about price, it's about principle. Gold is the warning, silver is the response. Together, they're the truth the modern world keeps trying to forget. This is MacroEdge, where we read the metal, not the media. Stay sharp. Stay aware. And remember, in the end, the truth will be measured not in dollars, but in ounces.